Hello and welcome everyone to this latest weekly market recap for the week ending Friday, July 25th, 2025. I'm Tom Bowley, Chief Market Strategist at EarningsBeats.com, and it's a pleasure to be with all of you again this weekend. Taking a look at the action last week, we saw the market continue to power forward. We had never closed on the S&P 500 above 6,300, and then we did it 5 straight days last week, each day setting a new record high. So we saw strength pretty much throughout the week. There was a little bit of rotation. Sometimes we had growth leadership. Other times it was value. For the week, we did see some strength in some of the value areas. We'll talk about that in just a couple of minutes. But this upcoming week is going to be a really interesting one because we've got a Fed meeting on Tuesday and Wednesday. So we'll get the latest from the Fed. We also will have the initial reading of GDP out this week. And if you recall, the first quarter was negative. So did we rebound from that, or did we see another negative quarter? We'll find out this week on that. And then, of course, earnings season really kicking in. We've got 4 of the Mag 7 stocks reporting this week. So we'll hear from Apple, Microsoft, Amazon, and Meta Platforms, all reporting later this week. So the market's going to have plenty to trade off of. That won't be an issue at all. We will start the week out with the volatility index considerably lower, moving down below the 15 level on Friday. So the market, normally when you get a volatility index that's that low and is moving lower, we're able to handle bad news pretty well. So even if, we do get some bad news out this week, the market is probably in a much better position to handle it than if, say, the VIX was at, 25, 30 or higher. So, at least the market's got that going for it. And like I said, we'll get a lot of news this week, and then we'll see how the market can react to it. But currently looking pretty good and at all-time highs. But let's go ahead and take a look at what's going on or what happened in the market last week. So let's start with that update looking at the indices. Transportation stocks, another big week. We closed at a new recent high on Friday with the transportation index jumping more than 3% last week. S&P 400 mid-cap was next, and then the S&P 500, both of those indices near the 1.5% mark. Dow Jones up 1.25%, but then the Russell 2000 and the NASDAQ 100 lagged last week, both gaining about 0.9%. Moving on to the sectors, this is where we saw a little bit more strength in some of the value-oriented areas last week. We had healthcare, materials, industrials, real estate, financials. Those 5 areas leading the market, gaining anywhere from 1.7% with the financials all the way up to 3.5% with healthcare. Healthcare had been a beaten up group, certainly getting a little bit of maybe a dead cat bounce. We'll see whether or not that strength continues, but at least for 1 week, healthcare saw a lot of buying. Down toward the bottom, you'll see technology. 0.42% gain last week. So it was the worst performing sector among the 11. It's never good when technology is lagging, but considering how much strength we have seen in technology since that April low, I think it's okay to give the group a week off. And that's what they got last week. So overall, I thought the market action is good. Anytime you get all 11 sectors moving higher, get that wide participation, that just gives the market a good feel. S&P 500, taking a look at the chart, and this is where we had closed 5 consecutive days over 6,300. Prior to last week, we had not had a single close in our history over 6,300. So it was nice to have those 5 record-breaking days in a row. S&P 500 just kind of melting up, which I think is a good thing for the market. This is what secular bull markets are made of. We're not seeing 3% gains in a day, anything like that. It's just this very slow, steady, methodical move to the upside. Very frustrating if you're on the bearish side and just watching the market just slowly melt up. But the S&P 500, like I said, very, very solid week, which was good to see. NASDAQ 100 also up, but like I mentioned at the open, this is one of the areas of the market that was lagging last week. So we saw some rotation away from growth areas. Semiconductors paused for a bit, and some of the other key growth areas did as well. And that allowed some of the value-oriented areas of the market to regain some strength and leadership, even if it's just temporary. The small cap IWM continues to move higher as well, although not quite at the same pace as we've seen on the Dow and the S&P and especially the S&P 500 and the NASDAQ 100. But still, everything on this chart looks good. I mean, we're trading above the rising 20-day moving average, which is above the 50-day moving average. So all continues to be good here with the small caps. Transports, this is what I talked about here. We did make a slightly higher close above the one we had back on July 10th when we had a very, very strong day on increasing volume. We pulled back. We managed to hold on to support at the rising 20-day moving average, which is perfect. This is what bull markets are made of. This is what bull markets generally do. They bounce off key support, and transports did exactly that. Moving back to new highs, though, by Friday, which I thought, again, was very bullish for the group. Anytime the transports are trending higher, it is generally a very, very good sign for the S&P 500, and we saw that again last week. Volatility index, as I mentioned, you can see it falling here, closing at 14.93 on Friday, continuing just to drift lower and lower and lower. This is what you want to see in a bull market. What you do not want to see are higher lows coming in. In this case, we continue to see lower lows in the VIX, telling us that fear is just continually just melting away. Let's pull up that healthcare sector chart. You can see last week, again, very strong week, but this was a beaten down group. So technically, we got back up through the moving averages, but we're not really trending at this point in healthcare. This is a trendless chart where you go up above and down below the moving averages multiple times. When you're trending, just like we saw with the transports, when you're trending up, you come down, you test the moving averages, you bounce, and you go back up again to new highs. That's not what we're seeing here with healthcare. Healthcare has been going sideways. It's been failing to hold on to the moving averages as support after we break above them. And so at this point, even though it was a really good week last week, I think it's way too early to suggest that the healthcare group is trending to the upside. I think the first thing we need to do is we need to clear these multiple tops at about the 137 and a half area. We closed near 136 and a half on Friday. And then after doing that, after breaking out and starting to show more signs of an uptrend, we need to hold that rising 20-day moving average the next time we test it. Moving to the home construction area. So last week we had a couple of good reports, earnings reports out of Pulte Homes and also D.R. Horton. So two pretty big names in the home construction area, home builders, came out with really strong numbers, much better than expected, and we saw a big move to the upside. I had suggested that the home construction group, after getting down to about that 2,000 level, I thought that would be a bottom and that we would start to see strength coming back into home construction. That's exactly what's taken place. We are now trending higher. I think we have an uptrend in play on home construction, although we're likely to get multiple 20-day tests as we move forward. So keep that in mind. Asset managers. One thing I looked at on Friday was all of the companies that hit, at least all the New York Stock Exchange companies that hit 52-week highs. And the asset managers group had 15 companies hit all-time highs, or 52-week highs on Friday. And there was no other industry group, at least not on the New York Stock Exchange, no other industry group produced more than 5 companies that set 52-week highs. So asset managers have been very, very strong of late. This close that we saw on Friday actually finally closed back above the January high that we had seen. So this was a breakout for the asset manager group on Friday. This has been a strong group. It's been showing a lot of relative strength. It's one of those that we focus on in our leading stocks and leading industry groups Chartlist that we provide to our members each week. And so there were a number of stocks in this group that I think are worthy of consideration. I actually am showing this chart in our Monday EarningsBeats Digest newsletter. It's a free newsletter that we offer. I'll show you how you can sign up for it in just a minute. But I also, in that article, identified 2 names that I really like in this space. So if you're already an EB Digest subscriber, you'll get that on Monday morning. If you're not, you can sign up, and I'll go over that again with you in just a minute. Heavy construction. I wanted to point this out too. You can see very strong day on Friday. The entire group gaining more than 6% on Friday alone. And that came on the heels of a Tuesday test of the 20-day moving average down near about 1870. And we ended up closing at 2,086. So we probably gained about 11 or 12% coming off of that 20-day test on Tuesday. Very, very strong rebound. This is a group that continues to strengthen. I like a lot of the stocks within this space as well. All right, I wanted to show you here on the predefined scans. If you go into StockCharts, actually at the dashboard page, and if you scroll down, you'll see under your scans, this little more area. If you click on that, you have a drop-down menu, predefined scans. So I wanted to just show you on the predefined scans, here was the New York Stock Exchange 52-week highs. So from here, what I did is I came in and I changed the scooter, or I sorted it in scooter order, and then I sorted it in industry group order. And if we come down here to where the industry groups start, here are the asset manager stocks. Those are the 15 stocks I was just referring to that set a new 52-week high on the New York Stock Exchange on Friday. And there's a number of these stocks that have very, very strong scooter numbers. You can see anything above 80, I consider to be a very strong scooter, especially those above 90. You can see a couple of those right here. Invesco, Wisdom Tree Investments, number of them in the 80s, and even some that had not been performing very well that are starting to show more and more strength. So anyhow, again, 15 of these asset manager stocks. Now, if you go down and you look at all of these other industry groups, diversified industrials, there were 5. Heavy construction, there were 4. Industrial machinery, there was 5. Investment services, there was 4. But 15 asset managers. So a lot of strength in that area. Just wanted to kind of, piggybacking on that chart with the asset managers group. I just wanted to show you that strength there. All right. If you go over to our home at EarningsBeats.com, first of all, if you scroll down, this is where you can sign up for our free EarningsBeats Digest. Name, email address, that gets you in. We'll make sure on Monday morning that we send you that latest article, which will highlight 2 stocks in the asset manager group that I really like. 2 stocks showing really strong AD lines, excellent relative strength. And these are stocks I think that will continue to work in the second half of 2025. Here in the, also on our homepage, this is an area of the market that I've been talking about that's already made a pretty good move, up probably 10% since we first started pointing this out. But I think it could gain 50%, another 40% before the end of the year, maybe into sometime in 2026. But I think it could happen by the end of this year. If you click on that, it'll bring you to this landing page where you can sign up, name and email address, and I will send you a video showing you exactly the area of the market, not only the area of the market, but why I think that it's poised. So you can evaluate my reason. You can agree with me, disagree with me, whatever. But we are at a similar phase in the market right now that we've seen in the past, which has led this asset group to increase by 50% or more in the past. We've seen more than 100% advance in this asset class with the same type setup that we have right now. So if you'd like to check that out again, just name, email address, that's all it takes. We'll get you set up there. And also I wanted to mention at our website, right here, that green button, start your 30-day no-cost trial. You do have to sign up with credit card, but there will be no charge. And we will remind you at the end of the 30-day period, before you get charged, we'll remind you that you're going to get charged and that you need to either cancel or take us up on an annual offer. We normally try to give our members a really good discount on an annual plan if you're interested in that, or you can just go monthly so you have no long-term commitment. But anyway, you can start that 30-day no-cost trial. I can tell you that our portfolios have been really performing well, and we're going to have our latest draft right here. You can see the performance. If you click on this button, you can come back and you can see how right now our model portfolio just in this current quarter is up almost 4 percentage points over the S&P 500, and the aggressive portfolio is up almost 9 percentage points higher than the S&P 500. So if you start a trial, first of all, you can come in and see which stocks we have in our portfolios currently that's leading us to this strong level of outperformance. But then also on August 19th or thereabouts, we will be announcing the next 10 equal weighted stocks that are going to go in each of our portfolios, and a 30-day trial will cover that period. So great time to try us out. Not only get the stocks that are in our portfolios currently, but then also get the 10 equal weighted stocks that are going to be in for the next quarter. So again, great time to join. All right, just a couple more things, and then we'll wrap up here. First, I did want to point out that gold, even though gold is not broken out, you can see equal highs coming across. You have rising lows. This is an ascending triangle off of an uptrend. This looks bullish to me, even though, again, long-term, I don't think gold is a better answer than the S&P 500. I think the S&P will outperform gold, but that doesn't change the fact that we are in a bullish pattern here on gold, and a breakout above about that 3450 level would measure up probably about to 3750 to 3800 on gold. So I do think gold goes higher. I just don't think it performs out or outperforms the S&P 500. What's interesting, though, I wanted to point gold out because gold, you can see, was retreating last week. Meanwhile, here's the gold mining index, and the miners breaking out to new highs. Maybe that's in anticipation of gold prices continuing to push to the upside. But this is a really nice chart, almost like an ascending triangle. Not exactly, a little sloppy, but definitely in an uptrend, trending above that rising 20-day moving average. The PPO, not a zero line test, but close to one. And now we've got the PPO starting to turn back to the upside. So I see increasing bullish momentum here in the gold mining stocks. This has been a part of our leading stocks and leading industry groups of late. These stocks continue to be strong for sure. Last week, this is our industry group relative strength list, and it's set to a time frame of 1 week. So what this is telling us is how much these various industry groups outperformed the S&P 500 last week. So this is not an absolute performance of gold miners. It is just simply telling us that gold miners outperformed the S&P 500 by 8.4% last week. Same with the miners. And if you come down a couple more notches here, number 4 industry group, heavy construction, that I pointed out to you, that came off the Tuesday 20-day test, had a really strong day on Friday. That was the 4th best group last week. Home construction was the 5th best group last week. Asset managers not making the top 10 last week, but asset managers remain very, very strong and did just make that breakout on Friday. All right. And one other group here that I wanted to mention, oil, equipment, and services. That was the number 3 group last week, and it was the only one I hadn't spoken about. So I thought I would pull this up and just show you. But oil, equipment, and services, even though they had a great week last week, look at the relative downtrend that this group has been in. So it's not like it hasn't shown strength once in a while. It does, but the longer term trend remains lower. So we really need to see the relative strength continue for more than 1 week at a time. And that's all we've been getting out of this group. So there's still a lot of work to be done here. If you go down and look at the absolute price chart on oil, equipment, and services, you can see that we're clearly still in a downtrend. And if you connect these highs to draw a trend line, you'll see that we're still quite a bit of ways away from breaking out of that, above that trend line. So anyway, this group not looking particularly strong. even though last week we did see some relative strength. It's a group that I would be very careful about. One last thing I want to mention is tomorrow, well, Monday evening, we will have our Q2 earnings webinar. This is available to all of our members. So again, if you sign up for a 30-day trial, you can come and join me. At the event, I'm going to be talking more about the upcoming earnings, the Mag 7 stocks that are going to be reporting. I'm going to tell you what I think what I think is going to happen with their earnings based on how they've been trading. And then also give you a recap of some of the best looking stocks to date, and then maybe throw in a few of stocks that will be reporting that I think look interesting other than the Mag 7 stocks. So make sure you check all of that out. And if you like what you see here on our YouTube channel, be sure to subscribe. You can subscribe below, turn those notifications on. Every time we do a presentation, you'll be notified, letting you know that we've got a video out that you can check out, or occasionally we do live streams. And so if you want to be notified when we start a live stream, make sure you are subscribed with your notifications turned on as well. Also, another thing that will help us is to like the video. So again, if you do like what we do here at EarningsBeats and you've been following us for a while, please like our videos. Again, that'll help us with the YouTube algorithm in trying to help grow our community. All right, that's it. Another week in the books. We'll see what happens next week. Again, this is going to be a week packed with a lot of market moving news, events, and so forth. We've got 4 of the 7 Magnificent 7 companies reporting. So we've got Apple, Microsoft, Meta, and Amazon all reporting this week, either Wednesday or Thursday after the close. We've got the Fed meeting Tuesday and Wednesday with another policy statement due out on Wednesday at 2 p.m. A lot of tariffs in the news. We had a nice, what appears to be the framework for an agreement between the U.S. and Europe. We'll see whether or not, if we get more details overnight, but it looks like we're going to get a deal there. We had a couple of deals, or at least what appears to be deals, last week. So we're starting to get more and more of the tariff news behind us. And then, like I said, we've got a lot of earnings coming up this week, along with GDP. I think that's on Wednesday morning. So anyway, we'll come back at the end of the week, recap it all for you. But until then, have a great rest of your week. Enjoy the last week of July. I can tell you it's hot here in South Carolina. I don't know where you are, but it has been roasting here in South Carolina. Have a great week, everybody. Happy trading.